Gavin James on Magic this morning, 8:35, makes it 25 away from 9 o'clock. Beautiful sunshine out there. We mentioned earlier Mike Barrett in from Barrett Insurance Agency. Mike, good morning to you.
Good morning. I'm a little winded this morning. I had to ice skate my way into the door here. Nice little ice rink parking lot you got there.
Well, I got to thank our buddy Eric Armstrong. He laid down some sand out there yesterday, and he's done a good job keeping up with the snow.
It's almost impossible to keep up with Mother Nature right now because the same thing in my house. I'll throw some dirt down, and we get a warm day and then the cold weather overnight again, and you get an ice rink again. So it's the joys of winter, right?
Tomorrow in the 30s and possibly into the 40s on Thursday.
Yeah,
So,
yeah.
Up and down.
Good times.
We talk insurance here. We call it Good Policies with Barrett Insurance Agency. Mike, you and I just had a really cool conversation here. I'll let you lead into it, okay?
Well, a lot of times what I'll do with when I come to talk about things with you is I'll think about stuff as I'm driving in, like, okay, well, what would I like to talk about? What's come across my desk is always one of the angles that I'll look at. And what's come across my desk quite consistently over the past couple of weeks are people looking for insurance on property, not automobile, property that don't currently have insurance for
Okay.
any number of reasons. Maybe they, and honestly, what I'm thinking about are people who don't have insurance because maybe they didn't like the premium of the insurance that they had and they just stopped paying it. It's the greatest catch-22 of my industry. If you don't have it, they don't want to give it to you. That's the weirdest thing you'll ever hear.
Why is that?
So companies like Experience is a big thing. So companies like to know for sure, like let's use an example of a commercial policy. All right.
All right.
So commercial policies, when you are a business and you're looking for other insurance, one of the common things that the new insurance agent or company is looking for is what we call loss runs. So they're looking to see what your 5-year window has been in terms of claims because they want to try to underwrite the risk and make sure it's an acceptable risk for the company. When you don't have insurance, you can't get a loss run. You can't get a good idea or a great idea of history there. So it's the greatest catch-22. Now, it doesn't mean no insurance company will take you when you don't have insurance. But if you are not happy with your current insurance, my absolute recommendation to you is pay it because you can always get your money back. You know, a lot of companies will have a short rate cancellation, meaning that they will have a cancellation fee if you cancel a policy, but that's mostly applicable only in the first year of coverage. Once you've had one renewal, you won't see that. So you can really get your money back, but keep your coverage even while you're shopping for replacement coverage. Number one, you want to protect your assets for sure. You don't want to have an exposure, but it does, you bode better with the potential suitors, if you will, if you have current coverage.
Well, what if, let's say, Robin and Richard, okay, the Joneses, you said there's a 5-year window. What if they've had insurance up until a year ago because they had some changes in their lives? You say, you referenced they didn't like their premium, but say they just couldn't afford it anymore.
Right.
That's within the 5-year window. How does that play in?
So now you're talking about personal lines. Personal lines doesn't necessarily use a 5-year window; they use a 3-year window. But if folks have gone and they don't have current property insurance and their personal insurance, which would be just a regular home or a structure like that, it does pose a challenge because companies, again, they want to see that you've had coverage. What's the concern? Well, if you really stop and think about it, it is a bit of a flag because you've gone a period of time, no matter what you're telling us or the company, you've gone a period of time without insurance, and now you're interested in getting insurance. Well, why are you interested? Did you suffer a loss? And now you want to get an insurance company to cover it. Let me give you a great example. Progressive, they changed it about a year and a half, almost 2 years ago, but they used to offer at the inception of a policy, you could write an auto policy with a $0 glass deductible. All right. Now you can still get a $0 glass deductible with Progressive, but you have to have the policy in place first, and then we can go back and change it. Why did they do that? People, pardon me, I think I'm getting whatever you got. People were buying an auto insurance policy long enough to have a $0 deductible, go get their windshield replaced for no money out of pocket, and then canceling their auto insurance. So these are the types, and that's really why companies make the rules they make. It's based on experience, it's based on history and statistics. So they have identified that people who don't have insurance that are now looking for insurance may pose a higher probability of loss.
This goes back, Mike, to a couple, 3 weeks ago when we were talking about how those folks that have a great insurance track record and can end up paying for those that haven't.
Right.
had insurance.
Right. And that's the way it works. I mean, insurance is based on, they derive the rates based on loss ratios and statistical data, and everybody's included in that. Where things can be better for those who have maintained insurance and maintain a good credit history and have no losses is that there are going to be crediting available, or there is crediting available and applicable to you that really would really help you out and give you a better rate than otherwise. But yes, rates are derived based on, I mean, it's not like when an insurance company, I'm going to use an auto policy, for example. So let's say an insurance company has auto insurance and they've suffered a really rough year. People just forgot how to drive. They've paid a tremendous amount of claims out. And now they're going to go, all right, we're obviously losing our shirts insuring automobiles. So we now need to increase the rates. Well, that rate increase will be spread amongst all policyholders.
Okay.
So,
All right. Well, that makes a good bit of sense. Let's go back then to the commercial lines. You were talking about 5 years was the window. Let's go on with some more about the business end of it.
sure. So when you have a commercial policy, yeah, the companies always are looking for a 5-year window. And the same can be true for a startup company where there may be some additional scrutiny. Maybe you decided, you know what, I'm going to open my own little bagel shop, or maybe I've been swinging hammers for other guys for years. Now I'm going to do it myself. There's many businesses that are just startups and happen, and companies will put additional scrutiny on that because we just talked about a 5-year window of losses or claims. Well, now you have 0 because you're starting new. So what the companies are going to go, okay, well, let's talk about your experience. They'll look at other angles because there's a little bit of a different consideration there for a startup. You're not necessarily penalized for not having insurance because why would you have had insurance? So it's a different animal altogether there. But it really comes down to companies really trying to find risks that are appropriate for their underwriting appetite, which changes all the time.
Yes, it
Which
does.
is why I have gray hair and a gray beard. But anyway,
Well, I mean, basically, it always comes back to, and we mention this in all of our good policy chats here, have the conversation, okay? Find out the criteria. And even if it hurts,
Yeah, yeah.
pay the price for a couple of years.
Yep.
And then things will change, right?
Exactly. You can always look around. And when you want to cancel a policy, always cancel by request. Don't ever let a policy cancel for a non-payment. It's just not the best way to do it. Now, it's not like there's this database going, here are the people who have canceled for not paying. Do not write them insurance. That doesn't exist. But not paying or not keeping a policy by just letting it cancel for non-payment, you could be leaving money on the table when you do that, because companies are legally required by the state of Vermont or by the state of New Hampshire that they can only cancel you after a window of time. Well, that window of time generates a premium. So you may be owing money or have already paid money that you're not getting back. So better ways to cancel than just letting it not pay.
And you'll find that on your credit report, right?
Not necessarily.
Okay.
Not necessarily, because you've already paid.
All right. So it's good policies. We do it Tuesday mornings. Tell folks how to get in touch with you.
Sure. Barrett Insurance Agency. We're on Portland Street in St. Johnsbury. You can give us a call at 748-5224. Visit our website, thebarrettagency.com. Google+, YouTube, and Facebook, all Barrett Insurance Agency.
All right, Mike. We hope you have a great day. Enjoy
You
the
too.
sunshine. We
Feel
hope that-
better.
Yeah, I'd love to.
Yeah.
Hope that you
You'll
and the
never look
missus-
better, but I'd like you to feel better. If
Well, I have
that'd
a face for radio. All right. Hope you and the missus have a good Valentine's.
be
Okay?
you as well. Thank you.
All right. Good policies, magic in the morning, and music on the way from Maroon 5 and Katy Perry.